Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
That makes a lot of sense. I've just put up the Canadian dollar because I think this will really hammer the point home. If you look at last September and October, the U.S. dollar was in a free fall, right? Because the ICFX options are based on the U.S. dollar. So the dollar is dropping. I think Raghee and Ilian would tell you at this point, I don't know if they were trading at that point, but there's no way that if you're a disciplined technical trader that at the 100 or 98 level that you're trying to take a stab at buying the U.S. dollar. Wouldn't that be right, Raghee, that the 34-day exponential must have been headed down? I know I don't have it on this chart, but with that steep decline there, I know a lot of us may not have been short the U.S. dollar or long, puts in the CDD, but it's hard to be long it if you were going by probably either of your rules. But I'll just really point this to you, Raghee, first, and think about what was going on in September and October, if you don't mind commenting on how you would have traded this.
Sure. I mean, the September, October, when we had the big drop with the ceiling at 82 on the dollar index and busting down to that key decade level of 80, absolutely, the trend was down. In fact, if you pull out to a weekly chart, you definitely see at least a very strong 2 to 3 year downtrend. If you pull out to that monthly, the 6-year becomes really evident. So depending on your time frame, your market cycle would be twitchy accordingly. But that's absolutely correct. I mean, you see the trend there. There's no arguing with that. In fact, the basing that we've done through April, May, June, July with that breakout finally in the end of July, beginning of August, that took us through the resistance, the ceiling that we had for most of the summer. That's kind of what ushered in what we're seeing now. It was really the dollar had two choices. The dollar index had two choices: either break down through the basement and start heading down to new lows, or bouncing. And fundamentally speaking, I don't know that the dollar itself is really all that stronger from a fundamental standpoint. I just think it's winning the battle of the world currencies, where we're just looking better here in terms of the U.S. dollar than the rest of the world. All of a sudden, by comparison, it's enjoying this bullish run now when you compare it to the Aussie or the Euro or the cable. So I don't know that the fundamentals have shifted here. I don't see any kind of Fed funds futures hike until March when you look at the futures. But certainly, from a comparison standpoint, that dollar's enjoying that little bullish run. So we'll see what happens here at the 77 level. And you're absolutely right. I agree with you with the commentary on how we play something like you mentioned, the CDD.
Ilian, do you mind commenting? I'm going to make one point before Ilian actually talks about what his view. That I'm looking at the Canadian dollar, and again at that low. I was not trading this, but if I was, the only way that I would have hit the bottom is occasionally the way I would trade is if I was short the U.S. dollar, I sort of buy my shorts in. I may have been sort of quote-unquote lucky at that 91, 92 level, but I don't think any of us really knew at any one number, unless you're just taking profits, that was the bottom. Maybe the only way you really see it, Ilian, I'd like you to comment, is sort of on that gap breakout, back up through 92 all the way up to 94, 95. If you were short the U.S. dollar, you surely had to take some profits. Ilian, do you mind commenting there?
You want me to comment on the dollar against the Canadian dollar chart?
Yeah, that gap, just put your mindset back in November. And if you were trading sort of from the short side of the U.S. dollar and you didn't cover at 90 or 91, when, as a disciplined trader, when would you have covered? You see that gap there at 92?
If you take a look at the whole price action since pretty much October, late September, maybe even October, of last year until maybe August, beginning of August. You will see that the price action has been taking place into the so-called, in my course here, I would call that a 1,000 pip range between 90 and 100. Those are the two major whole numbers that define that range. In a spot rate, that would be 0.90 cents and the $1, which is the parity level, right?
Yeah, absolutely.
So I would look for, if I was trading that 1,000 pip range, quarter after quarter, of course, 250 pips each. Obviously, we had a successful completion of pretty much 4 large quarters of 250 pips with the drop from October from the 100 level, which is the parity, towards the 90 cents level or the 90 level. On its way up, obviously quarter after quarter in November, you can see the move back towards the 100 parity level. And then that was the first time that we started sort of establishing that range that we had, with which was pretty much defined between the 2 large quarter points at 97.5 and 102.5. So that was about 500 pips of a range, which is great because it was a well-established range. You can go in and you can actually take advantage of it. Range-bound trading and move towards the bottom. If the bottom sustains, you can trade it for the move to the top of the range, et cetera, et cetera. My rule of thumb is not to go to the well too often in those cases, because either one of those, either the bottom or the top of the range, could be easily broken. And I find the breakout that occurred above the top of the range, that I always look for that fundamental catalyst that could contribute to such breakouts and such larger moves to occur. And in the case of the dollar against the Canadian dollar, that was the rapid decline in oil prices that started about a month ago. That was the main fundamental catalyst, if you will, for that breakout to occur. So I would have been paying attention to that range, establishing whether there is a trend or a range, because obviously there was a downtrend, then there was a reversal of that downtrend, the downtrend lasting towards the 90 level. There was a quick reversal. We got back to the 100 level. Then we established a range-bound trading, which is pretty much of a trend-less environment for a number of months, where we were stuck in a range for that number of months. And then finally last month, last few weeks, we had that breakout.
Yeah, so it seems somewhat bullish, although your quarters theory, what are we looking for in your quarters theory? 107.5, I guess it probably punctured there for, I don't know.
We did get there. We got as high as 107.27, if I'm not mistaken, which is close enough for me to call that large quarter between 105 and 107.5 as successfully completed. That occurred during a particular bullish trend wave as well, and we basically have gone through a little bit of a consolidation right now in the last 4 or 5 days. I think that we have enough of fundamental catalysts with news events that are coming from Canada in a trading session tomorrow and Thursday that could, if they prove negative for the Canadian dollar, and then on top of that we get that hurricane off of the Gulf Coast there and the coast of southern Florida. I think that oil prices, if they were to drop below a very important level, which is $112 a barrel, if there's a strong breakout, that could be that perfect storm, if you will, for another push that the dollar could make against the Canadian dollar to the upside. More than likely, we could target the large quarter point again at the 107.5. And I wouldn't be surprised if the oil prices continue to drop, if we end up seeing a move between 107.5, perhaps towards 110.
Those CDD calls then at some point, some strike price in there. That's interesting.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.